Hey folks, welcome to Soaring Profits. And this looks a little different because we didn't have a big jingle and cartoon characters playing immediately as soon as we jumped in here. But what we've been trying to do is we've been trying to inform people about, the mind, body, and soul that James talks about all the time, but as well as their financial wellness. And something that myself I've been very passionate about and trying to get across to people is learning the importance of getting your financial assets in line as well, making sure that your money is working for you, and that allows you to be, a better father, a better mother, taking care of your children, your family, those around you. So we've got a bit of a special guest host tonight. She is coming to us live from a black screen. Say hi.
Hi.
Sarah is a friend of ours. She's been on the show before. We've interviewed her. And she came to me and she said, Hey, I'd be very interested in having someone kind of teach me a little bit about day trading and what we're doing. Obviously, this is not during the day, this is after trading hours. So there's kind of our first topic. So, what is after hours? So, initially, the New York Stock Exchange that I tend to trade on operates from 9:30 a.m. Monday to Friday until 4 p.m. Now you can trade as early as 4 a.m. in the morning if you're one of those early beavers like James that's up there at 4 o'clock and going for runs and doing all that fun stuff. You can jump on here and you can make some trades. You can open positions, you can close positions, and you can take some profit off of those. However, the market itself manages and moves the most volatility from 9:30 a.m. to 4 p.m. Monday to Friday. Holidays, obviously, it's closed, but this is where the volatility rolls, and that's where day traders, that's where we make money. And what are we doing? Why is it important that we're trading? Is that this isn't a get rich quick situation. This is a situation in which us as traders are providing liquidity to the markets. So when we are providing liquidity, what does that mean? That means that when I'm buying and purchasing an asset, a stock, that allows someone else in the world to sell that asset. So if you have an asset that you're being managed by, say, a mutual fund, or your RSP contributions are being managed by your bank, right? They have a guy in a nice suit with a nice watch that's sitting there and is managing that asset for you. And he's liquidating and purchasing assets all day long. Well, how does he buy them? How does he sell them? There has to be a buyer for every sell and a seller for every buy. And that's what day traders do. We provide that liquidity. So that's what we're doing here right now, is that we're showing people a little bit about how day trading works, why it's important, and what it can do for you. So Sarah, give us a little background, kind of what it is you're hoping to accomplish for day trading, why you think it's important, and why you've kind of come to us and asking these questions.
Oh, I love being put on the spot here. It's great.
No worries.
Um, I'm looking to learn how to self-manage my accounts. I've got mutual funds and they've just been doing absolute garbage the last couple of years. So really
Right.
just looking to take things into my own hands and yeah,
That's
great.
easy. That's perfect. Right. So I think, you and I have talked a little bit about your situation, and you've had somebody else managing your funds and you're paying them a percentage to watch your money wash away in the stock market. And a lot of that goes back and forth to the more money, more asset value that a manager holds, the larger commission he makes. And therefore, he wants to keep you working with him. It doesn't matter if he gets you 2% or 22%. His game is to keep you playing. Does that make sense?
Of course. Yeah, of course.
How has that worked out?
Not very well. I was
Right.
told that I would get 8% in the one fund and 9 in the other, and I'm down. I
Right.
don't even want to calculate how much down I am.
Right. All right. So we're going to bring you into this. I want you to bring up your screen, and we're going to start with that little tool that we've talked about here at great length, Trading View. So you are,
It says I'm already sharing my screen.
let me bring it up then. How's that? Oh, we've got the screen of death. There you go. So Sarah, where are you in that process? You've just logged into Trading View.
Yes.
You have signed up for Trading View. And was that a hard process?
Nope, super easy, free account.
What did you have to do to sign up?
I Yeah, the usual username, password. I don't remember it being complicated as a few weeks ago.
Absolutely. Okay. So where you are right now is you are at basically the title page of this, and it's showing you basics. Right now, it's showing you a graph, that bar graph, that line graph, sorry, of the S&P 500. Can you scroll over and click the NASDAQ 100 beside it? Look at us, teamwork here.
I don't think that was supposed to happen.
Did you click that? Yeah.
Yeah. Do you see it?
Okay. So it's going to generate. It's generating. Look at it generating. Okay. So same thing. You've just transitioned to dark mode. That's what's changed here. And again, it's just this charting, right? You're seeing this charting, this movement. Okay. So if you look at us, we got the free trials and everything. So all of this is that line graph is the price action of that asset class. So the S&P 500 is 500 US companies that make up an indices. What does all that mean, right? So those are 500 companies, some of the top companies that we would all recognize around the United States, that their prices are taken on a daily basis and averaged out, divided by 500, and this is what they get. Okay, so that indices today is at $12,769, and as you see, it just changed $68.50. And why did it just change? I thought it's after hours, Pat. What's going on here? Are you lying to us already? Well, the NASDAQ, that indice is traded 24 hours a day on every trading broker around the world. Okay. So you can be in Germany trading the NASDAQ. You can be in Japan trading the NASDAQ. You can be Brazil trading the NASDAQ. And the NASDAQ is tech. Okay. So for a lot of us younger people, we have watched, the 2000s where our parents might have gotten blown up a little bit buying tech speculative assets. Pets.com, everyone thought was going to be the next greatest thing. They were going to sell dog food online, and it was going to change the way that everyone does business in the dog industry, in the pet industry. And it had a huge evaluation, and it went to zero and went bankrupt. Well, I thought tech was great. Well, tech is great. Tech has changed the way we do everything. We're looking at this right now on technology. I'm on my Mac. I think Sarah's got a Mac. I've got all types of software driving this. We're on StreamYard. I've got MLS, my real estate listings that are up in the same tab. All of that is technology. That's software. These are businesses that have come out to provide those as services. And the NASDAQ is a great tool to be able to follow and purchase those assets on, again, the same kind of thing as an indices, as a macro picture, right? So when we look at indices, we're looking at macro. What is that industry doing? What is that world doing? When we look at a company like Tesla, Sarah, what's one of the ones that you like? What's a company that you've kind of invested in? Sorry?
Salesforce.
Salesforce. Okay. So Salesforce is a micro, right? The macroeconomic picture is going to be viewed at the NASDAQ. The microeconomic view is going to be, what is Salesforce doing? Is it making its earnings? Is it getting its per share revenue up? All of the really nitpicky financing stuff that if you don't have your MBA from Wharton, you're not going to get all of that all the time. There's going to be things that you're missing, and it's going to be hard. But the NASDAQ's easy. You can kind of lick your finger, pull it into the wind, and go, COVID, everything's going to shut down for a period of time. Is that going to be a good thing for the stock market, or is it going to be a bad thing for the stock market? Okay, everyone's going to work from home now for COVID. Is that going to be positive tech or negative tech? Do you see how those are macro decisions that we can look at differently than going, oh my God, what is Salesforce going to do? Like, Salesforce is microeconomics. It's going to be, do they make their revenue per share? The macro is technology that helps people generate sales or run their business more efficiently and effectively going to be beneficial in X period of time? So that's what we're doing. That's all this is. And I highly, highly, highly suggest to people that when you first start trading, you trade ETFs, which are traded funds. So usually they're set up in a way to mirror the NASDAQ or the S&P 500. They're going to mirror the price, the daily fluctuation of price of one of these indices. And why do we do that? Well, we do that because it allows us to stick our finger into the wind and go, I think I have a rough idea where the macro trend is going to be. That's easier than trying to figure out if Elon's going to tweet something. Do you get where I'm coming from, Sarah?
Question for you. So what I thought the difference between the NASDAQ and something like Salesforce was that this is an index and this is a just like a single stock. No?
Absolutely. You're exactly right.
Is that what you'd refer to this as? Like CRM is like a stock?
Yep. So it is an asset. It's called an equity. It is a stock. Okay. So there's a bunch of things there, and we'll kind of glaze over them, but I want you to understand them. The stock of Salesforce, CRM, which is kind of a play on customer, what is it? CRM is
relationship manager. But even like Tesla, like that would be a stock, and this is and the NASDAQ is an index. Is that correct?
Yes, exactly. So the equity that you're buying is CRM. So it is a share of an equity holding of the company Salesforce. Okay. NASDAQ, when we trade it, I can't trade the NASDAQ 100 at that price, but I can find the QQQ, which we'll bring up in a second. I'll have you search and we'll show people how that works. It will, there you look at her. Look at her. She's ahead of the game here, folks. So this is an Invesco QQQ trust. And all these people have done as they have went out and they have matched on a daily basis the movement in the market. If the NASDAQ goes up 1%, the Invesco QQQ goes up 1%. It just follows it. It pairs it. But you can buy and you can sell this as an equity. Does that make sense?
Yes.
Right. So
I get the concept. Doesn't make sense. I don't know.
Sorry?
I'm not sure how much sense it makes, but I get the concept. This is a single equity similar to Tesla or CRM.
Right.
Gotcha.
So CRM is in trades on the NASDAQ and is followed by the NASDAQ indices. So it's in the NASDAQ.
Correct.
Okay. This, the QQQ, is the trust that we can invest in with our dollar. We can invest in, and then we can have an ownership to follow the market and benefit from the rises and falls of that total equity class that is the NASDAQ 100 companies.
Right.
Got it? Okay. So open up. So if you go down to your QQQ, you should be able to bring that. If you open that up, there's a little box there. Yeah. Click on that.
Where?
A little bit higher and to your left. There you go. That's going to full screen it, or should.
You could just ask me to make it full screen.
Yeah.
Go to the little box. There's a
Hit
lot
the box.
a lot going on here.
Right. So what is that? Tell me what you think that is.
Oh my God. Please don't do this to me.
You're on the hot spot. You want to learn. This is learning. What is it?
It's a chart.
Sure is. It's fancy too. Okay. So what you have there right now is you have hang on, let me pull this up. You have a chart and you've it looks like you've got the QQQ and something else on top of it. So the bottom price action you have at the bottom. Oh, you have the SQQQ on top of it. So you have the inverse. We're going to get into that in a second. So I want you to go to the top, and it should say on yours, because you have actually two things on your screen right now, because it sounds like you've been looking into this.
Yes?
Yeah, if you click that off, it should come off. There you go. Okay, so now what is that? Tell me what that is. What's it say in your top? About the third line down. If you look,
it is the QQQ. Yeah.
That is the price action of the QQQ. So that is on a 1 day period. So each one of those candles, the green and the red that are there, okay, are 1 day pictures of the price of that equity. Right? That all makes sense?
Yes. Is there a way that we can like zoom it? Oh, here we go.
Yeah, we'll get there in a second. But what I want you to do is I want you to start analyzing. The moment you open that, I want you to start thinking, right? So when you go back to that, what are you seeing as a trend in that equity?
Relatively downwards.
Okay. Relatively downward. And why? Like when your brain goes to that and says relatively downward,
Here's
why
the
is
top, here's the bottom.
right?
It's a decline.
Does it go straight down though?
Of course not,
Why?
because the economy has been a shit show.
Well, okay, so yes, but so you said a lot there, and I want to unpack that for just a second. You said the economy's been a shit show. Yes,
Mhm.
the economy has been problematic, but the stock market and the economy are separate things. Okay. The stock market is forward looking, the economy is backwards looking. Okay. So the economy is looking back for housing, labor, employment, all of the statistics that we look at are a month ago or even 3, 6, 9 months ago, and that's what we generate our economy out of. Okay, so that's backward looking. The stock market, on the other hand, is forward looking. The economy is very different, but they are connected at the point of today. Okay. So for today, we had an announcement from Jerome Powell, the chairman of the Federal Reserve Bank, and he came out and he had a meeting. And he came out and said some information that the stock market decided that, hey, we don't think that, the sky is falling per se today. So the QQQ, the NASDAQ went up almost 2%. Great. Well, has everything changed? Is the war in Ukraine stopped? Is China back to their full production? Can you go out and buy $2 eggs? No, the economy is still struggling. But why are we rallying? Right? It's because the stock market is not implicitly tied to the economy. It's more forward looking. It's saying that 6, 8, 12 months, we think that there's some light at the end of the tunnel here. Okay. So when we look at all of this stuff, our job as day traders is to make money on those ups and down swings, the volatility. The stock market goes up, the stock market goes down every day, every week, every month, every year. Does that make sense?
Yeah.
Okay. If you are waiting in a stock to get it when it's at the bottom, it's almost impossible to time that to get the very, very bottom. But we don't need to, because what we are going to practice today and what we're going to set up is as a practice called swing trading. So what we do is we wait for certain signals to allow us to buy in, and we're going to set these parameters up for Sarah here and show her how to do this, and that then she can buy in and she can ride. And when those parameters change, she sells, and then she can go short if she decides to. Does that make sense?
It will.
You're darn tooting it, Will. I love that. That's good. That was a lot of hope in what we're trying to do here. That was good. So right now, your trading experience has been very passive, right?
Correct.
So this is where we want to set up a paper trading account for you. So what is that? So at the bottom of your screen, right around the month of December, you're going to see a trading panel. There's a trading panel tab.
Here?
You got her.
Okay.
Click on that. And you're going to have to make it big. So once you click on that, there's going to be a little to the right. There's going to be a little button that's going to ask you to extend it, and it's going to bring it up full screen for us.
Are we talking about this here?
Scroll up. Yeah, will it bring it up? So you got to click the paper. There you go. So scroll that all the way up. Okay. So what these are your brokerages. Read them off for everyone can hear.
Paper trading, FX Open, Oanda, Forex.com, Interactive Brokers, and FXCM.
Okay, so you folks have heard me talk about Interactive Brokers before. That's the broker that I use. They have since amalgamated. They didn't always have this, but they have since amalgamated with TradingView. So it allows you to use this tool to trade every day, all day. If you want to invest and you want to hold longer, that's perfect. But what we're going to do today is we're going to set up a paper trading account. So I want you to click on paper trading, and it's going to say connect. Okay. So it should say there how much it usually gives you about $100,000 and it's fake money. This is monopoly money,
Great.
right? Is that what it says? 100,000?
Yep.
Great. So Sarah, congratulations. You are now 100,000 Monopoly dollars richer. The next time you play with your family and you're passing go and you collect $200 and you're like, screw that, I got 100K. You get to be the big dog, right?
Yeah.
So what we're going to do now is, again, this is after hours. This is 8:30 p.m. So we're very after hours. What we're going to do is we're going to select an asset class that trades 24 hours a day. And we are going to look at the price action. We're going to analyze the price action. We're going to set up our indices, so our indicators. And then we're going to actually live trade with this paper trading money, all from Sarah's account. How's that sound?
Good. Now you said we're going to pick an asset class that trades 24/7.
What's the asset class that you know that trades 24 hours a day?
Is that just crypto?
Crypto trades 24 hours a day, 7 days a week, 365 days a year. Sorry, I'm taking a drink out of my massive drink. So I want you to click on Bitcoin. Everyone has heard of Bitcoin. So it's Bitcoin BTC UST, and there's a T on the end of it, and that is Tether. So that is tethered to the US dollar. So click on that.
What's the difference between these two?
USD, you want the Tether. Yeah. So Tether is tradable. The other one is simply the price of Bitcoin. It's like the indices.
Okay.
Okay. So immediately you look at that. What do you see? Price action. What are you seeing?
It's doing decently well right now compared to all we've been hearing about it being not doing well.
So when did it start doing well? So take your T and you're going to look at the dates at the bottom underneath it.
Yeah, January it started just.
Right. Okay, so if you look at Bitcoin, so what is Bitcoin? What's your understanding of Bitcoin? What is Bitcoin?
Oh gosh. I am absolutely not going to try and attempt to.
Okay, so Bitcoin is an equity, is a holding, is a cryptocurrency in an asset class known as crypto or cryptocurrencies or digital currencies or whatever you want to call them. Like there's 1,001 ways to name it, right?
That's what we'll call it today. Perfect.
Right. That sounded professional. Did it sound like anyone was talking about?
Run with it.
Awesome. So if we look at crypto as a whole, crypto is huge on liquidity, right? So crypto is so in its infancy that it is determined the value of it by only its macroeconomic value. So what do I mean by that? It means that if you have more buyers than sellers, the price will go up. There's nobody that's coming in there and saying that I think that Ethereum or Bitcoin or these other cryptos, I think that I'm going to hold them because they're going to invent the next car or cell phone or whatever. They are a total speculative asset group. Okay. And there's people that will agree with me on that or not, but they are 100% a speculative asset group.
What I'm hearing is that their value is determined by what people think the value is.
Right now, yeah.
Products.
Right. Because we aren't integrated enough into the digital currency ecosystem to make it where we function and hit and use Bitcoin or Ethereum or Solana or Cardano or all of these other crypto blockchain technologies on our daily basis yet. Will we? Maybe one day. That does feel kind of where the world is going on a macro view, but it ain't there yet. You're not going to your bank today and paying your hydro bill in Solana. And you're not going to your car dealer and paying that in Cardano. And
Let's
you're
just
not
stick with Bitcoin for simplicity's sake.
right. But so that's where it comes down to. So Bitcoin right now is being touted as digital gold. Right? So it's an asset class that they are hoping that replaces gold.
And
Now,
Ethereum would be like silver. Is that what you're getting at?
so Ethereum is a platform. Have you heard of NFTs before? Non-fungible tokens?
Yeah.
Okay, so NFTs were something that blew up here a year and a half ago, where they had pictures of monkeys, pictures of ducks, pictures of all kinds of things. And they had a utility side of them that if you owned one of these apes, then you get to go party with the coolest, craziest people. And that was the utility of them. Okay. Well, those traded on what's called the Ethereum network. So that was like being traded in the British pound. That's how they were traded. Right? It's that currency that they're traded in. Do you understand what I mean by that?
Okay.
Okay. So when the currency falls apart and the asset value of the thing, the holding, whatever it has, falls apart, both of them are worth nothing now, right? Like the total crypto space got blown up over the last little while. Now, a lot of it is rallied. Why? Because these holdings depend on liquidity. And over the last year and a half, we've got big bad Jerome Powell saying, we are here to take money out of the markets. We're here to take money away from people to dampen down the demand so that supply can catch up so we don't have any more inflation. Right? That's inflation. When you have too much demand for a good, the person who owns this good can keep ratcheting up the price. That makes sense?
Okay.
Okay. When you have less demand, that inflation stops. That makes sense. Right?
Nothing. Yeah, it's not going to be worth more if nobody wants it.
God, if nobody has any money to buy it.
Yeah.
So that's where the government right now, the central bank, whether you believe that that's part of the government or not, I don't tend to, but the Central Reserve Bank is saying, of all the countries, like I follow the United States because I trade US equities. The Bank of Canada, the Bank of England, the Bank of China, the Bank of wherever you want, they all have central banks. Okay. They're all saying right now people have too much money. Kind of a crazy thing to say, right? Do you want them to come take your money? No. But instead of taking your money, they just increase the prices of everything. So we're on Bitcoin. And I want you to start looking at that price action. You've scanned back to 2019. So that's great. What is the overall trend that we were looking at there? So stop moving it right now. What do you see here?
It went up and then it went down. I'm not an analyst. I don't know what to tell you.
But you are. So you're becoming one.
Okay.
Right? So you see massive movements. Even at the top of those price actions, do you see them get up there and stay there, or do they come down violently?
They're very much up and down.
Right. So that volatility is not smooth or trend based or anything. So what we're seeing here is that this is a very volatile asset group. Okay. Yep. What was one of the things that we talked about at the very beginning here? We talked about volatile asset groups are great for trading. Why? Because that's where we can make money. We make money on the way up. We make money on the way down. We make money in the middle. We make money everywhere around these asset groups. Okay. So zoom in here, bring us into a rough. So what you're doing right now is there's an easy way to do this. So you're on the day, you're bringing us in. And then at the very top of your page, you're going to see where it says BTC USDT. You're going to see the D, right? So that's the day. Click on that. And these are all the different, click on that again. So these are all the different candles that you can have. As soon as you move away from it, it clicks away, it looks like. There. So you can trade it on the hour. You can have it on the minute, right? You can even go down to the second. But for our terms and purposes, we are going to look at it at the, first of all, the day, which we just looked at. So when analyzing, we're seeing that it's trending down where it looks like it might have hit a bottom. And now we're starting to see a rally. Well, is that bottom real, or is this just another movement in volatility? Well, this is where we begin analyzing. But that's the first picture that we look at. what is the trend? The trend is your friend. The trend is downward, right? This asset class has not rebroke a high. If you look right where, so stop moving for a second. Do you see where the 15-minute, well, the 1 minute is now on that panel? Do you see those days? The chart right beside it to the left? Right there. Yep. Until that price really gets up into that zone and breaks it, that's where I would be comfortable to be like, our new trend is upward. Until then, it's a downward trending equity. It's a downward trending commodity. This is whatever you want to call it. If you believe that this is digital gold, if you want to invest in this, it's downward trending still, because it goes up and down on its way to the bottom, right? So the trend is our friend. We want to keep in the back of our mind that the equity is still trending downwards. Okay. So now I want you to go to on your screen there, there's going to be indicators. I want you to click on the indicators tab for me.
Is this?
Sorry, just a second. I clicked away from you because I want to follow along with you. So indicators, perfect. So you've got that up there. So there's 3 indicators that we want to look at. There is what's called the MACD. You will appreciate that.
Mm-hmm.
So it is the moving
average
convergence divergence. So it is taking an average of all of the positions, and it's going to give us a trends and signal lines, which is important for us. So you've clicked that open?
I favorited it.
Yeah, so I want you to click on the one above it. There you go. Now go back to your screen. Right. Okay, so we got a couple. So the one that you picked there, the strategy, you want to get rid of that one because that's not going to bring anything that you want. So the blue lines, that's volume.
How do I get rid of it?
So if you go down to where it says MACD EMA, there should be, your screen is hard to see. So so the volume one, do you see where it says 24-hour volume? There should be an X right beside that on the left-hand side.
Left?
Yeah, the 24-hour volume. So the volume is the blue sticks.
This.
Right. So I want you to put an X out of there because you don't need that. Okay. The next one, so do you know where we did the paper trading? I just want you to expand your screen more. So if you go down to the paper trading and just draw that, draw that all the way down to the bottom. So this is bigger. Perfect. Okay. So your MACD, okay, is an oscillator. Okay. So what the hell does all that mean? When you look at your screen, I want you to look at where the blue and orange lines diverge and separate. And then when you follow this, so go back here, go back to right where this big red candle is your beat down candle. Okay. And I want you to look down at your MACD. The blue line is what we call our signal line. And that is an average. Again, you don't need to know why they all work. You just need to know how to use them, right? These are algorithms that are established and have been established for years and years and years and years. And they're tools that everybody uses. So the MACD is able to take a moving average. So it's a live average calculation all the time that is showing us when and where that it predicts where we're going to have softening of price. Okay. So you see where the stock starts to fall off a cliff, right?
Yeah.
Okay. Look down, and where does the blue line, which is the timeline, when does it cross the orange line?
After that?
It should be right around the top. It should be just
there?
Before. Yeah. So yeah, see, go back 2 more candles.
Like
right.
This?
That's the signal that's crossed over, right? So it's telling you that we've moved through, we had buying power, we started low, and now we're at a point where we're a little bit overbought, we could see a fall. And as soon as that crosses over, that becomes our signal to look at the bigger picture and do we want to still continue holding this, right? So right now that gave us 1, 2, 3, about 15 minutes to make a decision. Sarah, can you make decisions in 15 minutes?
Of course.
Of course you can. Okay, so now I want you to add another indicator, and then we'll talk about how we use the two of them. So the indicator that you're going to add here is called the RSI, and it's called the Relative Strength Index. There you go. Click on that. Okay, so I want you to look down at the bottom. So I want you to size these a little bit more. So you can click on, like you did the paper trading thing, I want you to be able to bring them to where they're a little bit more workable. Perfect.
Like even between the three of them?
Yeah, that's probably pretty good. And then on your left-hand pricing indicators, on your right-hand side, left side, right. I'm working backwards because my camera's backwards.
Sure.
Where you see the 71 and like 20 variables, I want you to pull that. I want you to click on that. Nope, too far over to the right. Back over, down.
Are you just asking me to move this over?
Nope. Well, yeah, you can. That's fine. But now move down. I'll tell you when to stop. Nope. Down. Keep going down. Nope. See where your RSI just popped up? This new, yeah, right there. I want you to size that because it's a little bit expanded. I want you to size it.
Like that?
Yeah.
Or down?
I want you to size it a little bit bigger. Perfect. So I know that this is all silly, but we're actually manipulating the tools that we need to use. Okay. So what is an RSI? An RSI is a relative strength index, and it's an indicator like the MACD that allows us to be more informed on whether the asset that we are looking at, the product that we're looking at, is either between two parameters. Okay. If it gets above 70, and you can change all these, a lot of people use 80 and 30. A lot of people use 80 and 20. It just depends. But what these are is they are a parameter that allows us to look very quickly and make decisions. The RSI, once it gets over a certain value, is considered overbought. And when it's under a certain aspect, it's considered oversold, right? So that's giving us general information that we can look at very quickly and go, do I want to short this? Do I want to go long this? What do I want to do right now? Did you have a question?
Nope. Just grab pen and paper. So
Great.
Is it once these are over or under a certain number?
Once these are a certain number. So they are a moving average that is an equation. So yes and no. If you look at the price action, okay, so if you go to the RSI, because we'll bring it up because you're kind of blocking a big chunk of it with your head there. I don't know if you can see that or not. So if you go to your RSI and you see that arrow that's right above where you're looking, yeah, that'll bring it up. There you go. So I want you to see where price action of the RSI. So you have the signal line that is the yellow, that is a moving average. And you have the actual overbought and oversold signals that is the light blue, okay? I want you to look in relation to the pricing above.
Are you calling this light blue?
Is it light blue? What is it?
It's purple, but
See, I'm a dude. I don't know. This looks like maybe light blue too. It could be purple. I'm not sure.
I'm just making sure we're talking about the same one. Okay.
Yeah, 100%. So I want you to go back in time here and look at where it gets oversold. So it hits this bottom range. And then when it hits the top range, what do we see the price do?
Okay.
Do you see the relationship that's established?
It's tanking, going up a bit.
So you're seeing a relationship, right?
Yes.
Okay. Now that you're seeing a relationship and you're understanding how indicators can make our life really, really simple, where we're not just, throwing hope into the wind, now you can start setting up planning for your trading. So a really simple, easy way to trade is that you buy whatever you want to buy when it hits oversold territories. Okay. And how would that work for you? If you bought all of those shares of Bitcoin anytime that it hit an oversold territory, even on a downward trending market, you would still have profitable option to trade. Look at every time it hits that oversold territory. What does it do?
Is oversold the bottom line?
The bottom line. Yep.
Yeah, it goes up afterwards.
Why? Is there something magical that you've just invented?
No.
No, it's because everyone in the world that trades this shit is looking at those same indicators. So all you're doing is going, okay, there's a bus to the Leafs game tonight. You want to get on it or do you want to stay at home? There's a bus. It's there. It is at the bottom. It's all it needs is your ticket. Do you want to ride the bus? Did trading just get stupid?
No.
Did it just get kind of easy?
No. But it's starting to make sense. These are very helpful tools to understand. I don't want to get my terminology wrong, but
and this is when I would say right here, if you're trading this is someone who is investing. Okay. This is someone who is investing. If you are buying when these assets hit these oversold areas and you ride them back up, and then you sell them when they get to overbought at the top parameter, 9 times out of 10, you will do very well. 9 times out of 10. And the reason is that you might get the majority of the run and you'll minimize the vast majority of the loss. Okay. So you are basically trading right now the way that mutual fund traders trade. You're not paying 3, 4, 5% to somebody to do it for you. This doesn't take a lot of work. Okay. So what we're going to do right now is we are going to set an alert so that the next time Bitcoin gets to oversold, it's going to tell Sarah. Oh, look at her. She's already learning. Okay. So crossing. So nope, that's where you want. I want you to hold that up there and hold it all for all the parameters that we can see. Okay. Your face is in the way. So move it over a couple, 3 inches to the right. Okay. Perfect. Yep. So the condition, what is the condition? It's Bitcoin USDT tether crossing, right? So you want it when it hits a certain thing, and then you don't want the value. You want, click on that. Sorry, go to value, and you want the RSI. Okay. Now RSI, and then you want to set a value to RSI. So you have RSI 14 close. So you want it to hit the, right. So we want it to get RSI. Now go over to the others. Yeah. And then it should be in there a RSI based MA. Yep. Moving average. And then you're going to have once per bar. So every time it hits it. So just once per bar. Okay. And then you're going to hit create. So you can alert, you can make a name for that, right? So as that moves, as that RSI moves now, it's going to alert you and tell you, hey, something's changing. Oh, okay. Well, what should I do? Okay, well, I can log in. I can go look at it and say, is this something that I want to be a part of or not? Right? So these are all tools that you get to play with, get to manipulate, get to try out. Very cool. So now that's investing. Okay. I've talked to a lot of people about trading, day trading, swing trading, and what the differences are. So day trading, you might hold a position for seconds or a couple minutes. Swing trading, you might hold a position for a couple hours or a couple days, maybe as long as about a week. Anything after that, you're probably not, you're not in that trading. So what we're going to do is we're going to kind of minimize the RSI and the MACD. We're going to just squish them down. You know how we did that before? Right. Look at that. Look at us. We're gonna need them again, so like don't just crush them, but we're gonna focus on price action here for a while. No, you're higher. You got to go underneath the name, the RSI name. There you go. There you go. So bring them down.
Okay.
Okay. Yep, that's perfect. So now we're going to go back up to the very top, and we're going to look at where the 3M is. So that's the 3 month, and we're going to take that and we're going to do it to the 1 minute chart. Okay. You're going to have to hit auto. See how it's tiny, tiny, tiny little things now?
Mm-hmm.
So if you go down into the bottom right-hand corner, well, ish, yeah, auto. Right. Oh, look at that. Okay. So what is that? What are we looking at?
Minute play-by-play.
Exactly. That is live. So stop moving your thing there for a second. Do you see where it's the red flag that says BTC USDT and it's got its price? And then it's counting down 4, 3, 2, 1. Okay, you're going to see a new price move. Do you see it move? It's moving. It's live. It's alive. Back over at your price action. That little stock is moving. Do you see it? It just went green and is moving up and down.
Mm-hmm.
Okay, so I want you to click on the price action. I want you to scroll up to give us a little bit more of a zoom. Sorry, the price where we were, we had BTC USDT. And I want you to zoom in a little bit on that.
Sorry. Where am I looking?
Over to the right more to where the price is. Nope,
Yeah.
not yet. There. And I want you to like zoom in. Yeah. There you go. Okay. So the more we zoom, the more we're going to be able to see where we are in that situation.
It just becomes more granular, right?
A little bit, yeah. So then you can scroll down to the bottom, like bring your mouse back to the middle and then go and then down to the lower part, like just above the RSI. Into the middle of the page and then down to the bottom a bit, just before you get to the RSI, just above it. Okay, down a little bit more, sorry. It's going to give you a plus and minus. Okay, go down lower. There. See where it's a minus, plus, and then 2 arrows? I want you to go plus, plus, plus.
Here?
Yeah. Okay, now recenter everything so we can see everything. There you go. Look at us. What does that look like?
A lot of information.
That's exactly what it is. Okay. Now go back to your RSI, bring up your MACD, see what's happening. See where we are in this snapshot. And then tell me what you see. I'm having a drink. So, okay, so your MACD right now, because we're on such a tight timeline, needs to be reset. So you scroll it back like we did with the price action to zoom in. So scroll it until you can see it.
Is there any other way to do this other than?
So TradingView is really built for tablets where you just go snap and it all pulls it up. Because this is web-based, the functionality is slightly lost.
Oh.
Yeah, so bring that up and then scale it back up with your trigger and then go back and feed it in again.
This is getting a little painful here.
There you go. Now go back and pull up. Yeah, so pull it up.
Where did it go?
Grab it again and pull it up. Grab it again and pull it up. There you go. See, you're almost there. Okay, now zoom it again so that you can see where everything is. There you go. You got it.
Whew. All right.
Okay. So do the same thing with your RSI so you can get a really clear picture of what the RSI is doing. Okay.
Like that?
Yeah, that's good. Well, until you can see it. I can't totally see it here. So I'm kind of running off you here. So your RSI, is it in the top half or bottom half of the RSI, relative strength index? So the yellow banner is telling you the exact number. What's the number? Read it out.
41.
41.93.
Yeah.
So if we know that our top parameter is like 70, and our bottom parameter is like 30, 40 is kind of like in the middle, right?
Mm-hmm.
A little bit lower, but it's, it's not 80, it's not 10.
Mm-hmm.
So what that is that is trending. Okay. You're not going to see massive moves either way. So this is a trending market. What's your RSI telling you? Your RSI is below the signal line. That's where all of those red and green candles are. But it's telling you that it's now crossed the signal line heading up. Okay. So what we're seeing now is, from my perspective, I'm seeing an upward movement in the price action, but it's not ready for a massive move. Why? Because none of the other big parameters are set. Do you get where I'm coming from?
Don't want to lie to you.
So the MACD is showing that it's on a bottom, like it's already hit the bottom, and it's slowly moving back up, but it's in what we would call a ranging market, right? There's nothing happening right now that is like telling the market that it's either oversold and it's got to come back up sharp, or that it's overbought. It's just kind of in the middle right now. It's that awkward range of not knowing where it's going to go next.
Question for you, as someone who's very new to this.
Yeah.
Like, looking for like a legend. Like, is there no legend?
Just me.
Okay.
What do you mean a legend?
I'll make notes. Like, for what this blue line means, for what this orange means.
Okay, so when I say to you a moving average, okay, all that is an active average of different historical price values.
Okay.
Okay, so some of them you can change parameters and you can mess with them a little bit, but some of them take a 9 period moving average. So because we're on the minute, okay, it would take 9 minutes, and it would look back 9 minutes what it's done. Some of them are 20, some of them are 50, some of them are 200, and then they average those again, and then they give you the signal line. Do you get where I'm coming from? Okay, so when we do it that way, we have all kinds of moving averages that make up a position of whether your price is below the average. If I told you that I've got a car for you that is below the average price, do you want to buy that car, or do you want to run away from that car?
I want to buy it.
Why?
Because the price is below average, assuming that the quality is the same.
Right, but we know the quality is the same because it's all Bitcoin.
So yeah, you want to buy it below average.
Right. Does that hit home more? So these lines are telling us our averages. If we're above average, ooh, hang on, this could fall. If we're below averages, oh, hang on, this could go up. And that's what these indicators are giving us, is that information. They're telling us if we are above average or below averages. And then we trade accordingly, because now we have information to play off of. Okay. So you're looking at your price action and you're seeing a downward trend, but we're getting to the point now where we're seeing some stability at the bottom, right? It's consolidating. And I think you're going to see over the next little while that this is going to reverse either to the upside or the downside, because it has to break this channel, because it can't keep squeezing anymore. It gets too tight. And you'll see likely a movement to the upside back up to the top of that little hump. Well, why? Because that tends to be the way that the market is pushing it. It's pushing it there. Can it drop to the downside? Sure. But our MACD has rolled over and is starting to head back up. Our RSI is bouncing off the signal line and is starting to pitch back up. So the opportunity, it has to break through that, the second hump there. That would be a double top resistance. And once it breaks through that price, the position would be a take profit set at that next price. But let's do that. What do you think? Sarah, do you think that this is going to go up? Do you think it's going to go down? All you're doing is you're at a carnival right now and you're making a bet.
Which one is gonna, I guess they're all following the same thing, but these are the only two that I can see the parallels with. I'm assuming that, or I'm predicting that it's going to go down.
You think it's going to go down?
Yeah.
Okay. So what we're going to do then is we're going to take that bet. So I want you to, oh, look at it. It's coming down. If it gets resistance. So now what I want you to do is I want you to go beside the BTC USDT, the red banner up top. Put your just to the inside of the price action. See that little plus sign that popped up?
This one?
Yeah. Click on it. What does it say there?
The add alert.
So that's add alert. But what do the other two say?
Buy and sell.
Right. So you can, that's how easy this is. Did that just get stupid? Did that just make all of your...
clear? It became clear. Yeah.
Right. But it made it your barrier to entry is not sitting there and trying to get on a special app and trying to do something super special. This is something you can do sitting at your desk during the day.
Yes.
Yeah. Okay. So do you want to buy so do you think it's going to go up or do you think it's going to go down?
I'm looking at this one, right? I don't understand this one, the MACD, to be honest.
Okay, so your MACD.
I know we're looking at this one, if whether I'm going to buy or I'm going to sell, but what, like, in the most basic sense, what are these telling me?
Okay, so the RSI is your relative strength index. It's telling you a generic view of average price if it's overbought.
Sorry, what are they predicting? I should have asked. What are
it's predicting the past averages to current price and the variance between the two.
So this is lower than, yeah, I don't know, to be honest.
But you got to play the game. So right now you're playing with the bank's money, right? No,
I'm asking like, what signs am I seeing here that are going to help me understand or help me predict?
Okay, so the RSI.
What am I looking for? Yeah. Okay.
So the RSI, remember we talked about the tops and the bottom ranges?
Mm-hmm.
Okay, so the top range is overbought. What does overbought mean?
That please don't ask me questions. I'm trying to wrap my head around this.
No, but I'm asking because we're going through this. So what does overbought mean? Like those words, overbought. It means that the stock has been overbought. The price is run up too high. It's hitting a position now where it's not sustainable, and it's going
to go down.
It's going to pull back.
Yeah.
Okay. What does oversold mean?
The inverse of that. So
the inverse. It's been beaten down. Price action has been beaten down against the moving average, and now it's giving us an option. It's giving us an opportunity to go long, right? Because we're hoping that the price rallies back to the average. Remember the car? If I give you a car that's under the average price, do you want to buy it? Yeah. Great. Do I want to buy a house that's under the average? Yes. Do I want to buy Bitcoin under the average? Yes.
So what I was seeing when you asked me what I thought it was going to do, I said I thought it was going to go down, and it is going down. Is that because this is about like the halfway line between that, and because it's below that line? Is that why I thought that?
Right. You're looking at your indicators. So as soon as it breaks that signal line and you're seeing your MACD,
this is the signal line.
The signal line is the yellow line. The signal line is your average.
Okay.
The purpley line that we talked about earlier is the average related specifically to Bitcoin in that moment. The signal line is a longer moving average. The signal line is an average that's closer related to the exact price right away. It's a shorter average. So it'd be like if I said to you a car, if you have 100 of the exact same cars on the lot and the price of it is $50,000 for the car, okay? Mm-hmm. And I'm going to give you it for $49,000. You go, okay, that's $1,000, great. But if I take the province